Welcome back to WellPod X. Today's 10th of January 2025. Bitcoin is holding steadily at $94,000, marking minimal changes over the past 24 hours. However, market sentiment seems to be shifting. The price briefly dipped below 93,000 overnight before recovering as buyers stepped in, showing resilience near support zones. Trading volume has been slightly lower today compared to yesterday, potentially indicating some hesitation among investors. This could be due to macroeconomic factors and ongoing fear about regulatory actions, which we will touch on in the news section. But for now, Bitcoin continued to show strength above $90,000. As always, we'll keep a close eye on the volume and well movement for a clue about potential breakouts or pullbacks. The argument that Bitcoin is a bubble has been thrown around for years, often by skeptics who point to its volatile price movement. But what if we compare Bitcoin to Nasdaq or even the famous Tulip mania? When people talk about Bitcoin being a bubble, they often refer to the Tulip bubble of the 17th century. During that time, Tulip price skyrocketed as speculation drove the market, eventually collapsing spectacularly. But here's the thing. Despite the bubble, the Netherlands remain one of the largest exporters of tulips today. Tulips found their intrinsic value after the speculation ended. Now let's compare this to Nasdaq during the dot-com bubble of the late 1990s. Stocks of tech companies skyrocketed, many without any substantial business model. When the bubble burst, it wiped out trillions of dollars, but the tech sector didn't die. In fact, Nasdaq is now one of the most valuable indexes globally, viewed by the likes of Apple, Amazon, and Google. Bitcoin shares similarity with both examples. Yes, it has a speculative cycles, but it's also evolving beyond being just a bubble. Institutional adoptions, layer 2 solutions, and its deflationary monetary policy all point to Bitcoin finding its intrinsic value as the digital gold of the 21st century. So if tulips and tech could survive their speculative booms and find lasting value, why not Bitcoin? The real question isn't whether Bitcoin is a bubble, it's what happens after the hype dies down. And history suggests that Bitcoin, much like tulips and Nasdaq, could be here to stay. Now let's take a look at today's crypto news. First news. The crypto market is buzzing with speculation over Donald Trump's financial woes and their potential ripple effect on Bitcoin. Recent reports suggest that assets linked to Bitcoin's business empire could be sold off due to legal and financial pressure. While these aren't directly tied to crypto, there's concern that the uncertainty and fear surrounding high-profile asset liquidation could affect broader market sentiment, especially in risk-on assets like Bitcoin. If the sell-off were to spook investors, Bitcoin could potentially dip to $88,000, a key psychological level often cited by analysts. However, it's important to note that Bitcoin's correlation with traditional market has been weakened in recent months, showing signs of resilience as an independent asset class. And if we look at history, Bitcoin has rebounded strongly from such fear-driven events. For now, the 90K support level remained critical. Breaking below this level could open doors for further downside. But as of today, Bitcoin's price action suggests strength and resilience. The market will be closely watching for any news related to Trump's financial issue, as even indirect factors can create volatility in the short terms. The second news. The US government has authorized the sale of $6.5 billion worth of Bitcoin seized from criminal cases. This marked one of the largest planned crypto liquidation in history. The Bitcoin in question was confiscated during high-profile operation targeting dark web, marketplace and illegal activity, including the infamous Silk Road case. The sale has raised concern among investors about the potential impact on the market. Dumping such a significant amount of Bitcoin onto the market could lead to short-term price instability. Government sales like this have caused a temporary dip in the past, as the market absorbed the increased supply. On the flip side, large buyers, such as institutional investors and whales, often view these sales as opportunity to accumulate Bitcoin at lower price, and in past cases, market has demonstrated resilience, recovering quickly after initial sell-off. Third news. A UK judge has dismissed a $770 million lawsuit involving a lost Bitcoin stash buried in a landfill in Wales. The case revolved around James Harrow, a former IT worker who accidentally threw away a hard drive containing 8,000 Bitcoin during a house cleanup in 2013. The Bitcoin could be worth hundreds of millions today, but the local council has consistently refused to grant Howells permission to dig up the Landfill. Citing environmental and logistical concerns, Howells argues in the court that the council's refusal violated his property's right, but the judge dismissed the claim, stating the council's acted within its legal authority to protect the environment and public health. The decision is significant as it reaffirms the risk associated with losing access to private key in the crypto world. The case highlighted a fundamental principle of Bitcoin. Possession is ownership. If you lose access to your private key, there is no recovery. The story serves as a cautionary tale for all crypto holders to prioritize secure backups and self-custody solution. Just don't let your Bitcoin end up in the landfill, because once it's gone forever. That's a wrap for today's episode. If you found today's video helpful, please like and subscribe. Stay invested, and I'll see you in the next one.